So Walmart stock might be in trouble due to tariffs.
Courtney Reagan, she's back with us. You got the number?
Hi, Joe. Yeah, so Walmart reporting first quarter adjusted earnings of 61 cents per share. That's above the 58 estimate on revenues of $165.6 billion. That one's slightly below consensus of $165.8 billion. Now, the U.S. same-store sales, those rose by 4.5%, also above expectations, driven by health, wellness, and grocery. Continued share gains in grocery also noted in the release. Now, net U.S. e-commerce sales grew 21%, and this is notable, this is the first full quarter where e-commerce was profitable. Walmart had said it was on track for profitability at its investor day. It does indeed look like it happened. Now, the retailer affirming annual guidance just as it did at its investor day in April. Walmart also forecasting second quarter revenues to grow between 2.5% and 3.5%. But Walmart is not giving guidance for second quarter operating income, due largely to the wide range that it would have to give because of the tariff impact on its accounting method. This is a little wonky, but I spoke with CFO John David Rainey, who explained that Walmart uses the retail method of accounting, which uses a cost to sales price ratio, which then is very hard to predict narrowly with tariff rates changing wildly. So Rainey says the quarterly fluctuations are going to make it really difficult, but thinks that over the year, it'll even out. So it's holding its annual operating income estimate. He explained that we import 1/3 of what we sell in the U.S., China, and the largest, of course, is China, then followed by Mexico, Canada, India, and Vietnam. He also said we are pleased on the progress that's been made by the administration on the tariff levels that were announced in April, but they are still too high. We will absorb some of the price increases, and suppliers will too, but consumers are likely to see some price increases, and that concerns us. But Rainey said managing inventory is really going to be what sets retailers apart in this environment, noting, quote, we have not canceled any orders with suppliers. We have reduced some orders on occasion. Now, Rainey says consumers right now are discerning, mindful, maybe a little concerned about possible looming price increases, but their behaviors have not changed.
So basically, they beat first quarter earnings estimates, but fell short on sales expectations. And they actually did have some positive news that said its e-commerce business was profitable for the first time during the quarter. So that's good. But the thing is, they say they will do their best as much as they can to keep prices as low as possible, which is literally the whole point of Walmart, is to keep prices as low as possible. That's why people go to Walmart. Everyone you probably know goes to Walmart specifically because everything's in one place and because they usually have the lowest prices on most just like general goods. But given the magnitude of the tariffs, even at the reduced levels announced this week, they aren't able to absorb all the pressure given the reality of narrow retail margins. So because margins are typically very narrow in general, just for the nature of the business, the tariffs, any kind of tariffs, even if they get reduced, like they had the reduction for the tariffs on China, look at how many things that you see in Walmart are probably made in China. I mean, countless things in Walmart. So actually, Robert Ohms of Bank of America estimates that Walmart imports roughly 15% of its U.S. sales from China, which is around 60% of the U.S. sales are groceries, which are largely tariff exempt if they're produced domestically or in Mexico and Canada. But that being said, some groceries like bananas, avocados, and coffee, as well as even roses, are going to be under pressure because of tariffs on countries like Costa Rica, Peru, and Colombia. So a lot of the China tariffs are going to affect Walmart negatively for other goods that are not grocery related, even though 60% of their revenue comes from groceries. But there are still some that could affect them, again, from many like Latin American countries. So because of all this, Walmart stock was down today. It did bounce back. It was down a pretty steep amount, went from 94.49 to around 92.30, which is pretty bad, but they went back up. So now they're only down about half a percentage point or so for the day. The problem is going forward, we don't know if this going to affect their stock going into future months and going into the rest of the year. A lot of this is still going to be up in the air based on whether or not these tariffs are going to stay in place. Are they going to be reduced? Are we going to make deals with other countries? What's going to happen? We have really until about July, which is when President Trump gave the deadline for a lot of these deals to get done. Even though their PE ratio is still kind of high, if you look at how much they've earned in the past year in terms of stock growth, it still could be a fair PE ratio if you compare it to how they've gotten a 61% return in the last year and a almost 130% return over the last 5 years. Obviously, none of this is financial advice. I'm personally staying away from Walmart right now due to just the uncertainty of tariffs and how this could really affect them, and especially when their entire reputation is based on having low cost goods.